This is the man who destroyed crypto, right? Wrong. Sam Bankman-Fried is not the man responsible for exposing the massive frauds in cryptocurrency. Maybe some of you are saying it was this guy, Do Kwon, the founder of Terra. Remember the Terra Luna collapse? That was the first big bankruptcy that set off all of these dominoes falling one after another. Maybe it was him who exposed the massive fraud in cryptocurrency. Wrong again. You want to know who's really responsible? This guy, right here. Uncle J Powell, Jerome Powell, the chairman of the Federal Reserve. This is the man who is responsible for exposing the widespread fraud in cryptocurrency. Why? Because he is the man who's making money more scarce and raising interest rates. And when money becomes scarce, when interest rates, the price of money rises, it exposes debt-based frauds. And that is exactly what FTX and Terra Luna and Genesis and a lot of these cryptocurrency companies that are failing right now are. At best, they are ultra high-risk debt, and at worst, they're outright Ponzi schemes. And every time somebody like Jerome Powell starts raising the price of money, when they start raising interest rates, when they start quantitative tightening, every time it exposes the highest risk assets to failure. Take this guy, for example. This is Alan Greenspan, former Federal Reserve Chairman. In 2000, he was raising interest rates. He was engaged in tighter monetary policy, and it caused the popping of the dot-com bubble. Companies with no earnings and grotesquely high valuations could no longer access the debt market for cash to sustain money-burning operations, and one by one they started to fail. It was Alan Greenspan that popped the dot-com bubble. And what about this guy? This is a Nobel Prize winning economist, Ben Bernanke. He was the Federal Reserve Chairman who was raising interest rates when the housing bubble collapsed. Well, what were the riskiest debt-based assets in the housing bubble? They were CDOs, they were credit default swaps, mortgage bonds, subprime mortgages, risky debt that couldn't be continuously refinanced or rehypothecated or reborrowed or re-whatever. When the price of money went up, these risky assets started to fail. It is always the riskiest debt-based instruments that fail first. And if you follow some of these other finance channels, like my friend Greg Manarino, he's been calling for this all year. Maybe not exactly this in this form, but if you've listened to Manarino for the last year, he's been talking about an implosion in the debt market that was coming. And isn't that exactly what we're seeing right now? An implosion in garbage debt. That's exactly what we're seeing at FTX. They owed billions of dollars to themselves, and people invested in this expecting these ultra high returns. They staked their money expecting a risk-free 15% return on their investment, and the whole thing blew up. We have seen this before, not this exact thing, but this is what happens during tightening cycles. Now, here in the States, we're all about to head home for Thanksgiving. We're going to meet with family. A lot of people are going to be talking about what's failing in crypto markets, what's going on in the economy. Familiarize yourself with this over this long weekend. This is Exter's Pyramid, and this ranks all asset classes according to their risk and their size. The higher up this pyramid you go, the riskier the asset is, the higher the counterparty risk. At the base of this pyramid is gold, which is a riskless asset. Physical gold and silver has no risk attached to it. Nobody needs to pay you in order for that gold or silver to have any value. Now, the higher up the pyramid you go, the more counterparty risk there is. Paper money is basically a debt and IOU from the Federal Reserve, from the U.S. government. If you go up even higher, you get government bonds, treasury bills, even higher risk than that, corporate bonds, stocks, real estate, commodities, all the way up to derivatives and unfunded liabilities. And all the way up at the top, that's where I would put these cryptocurrency scams. All of these DeFi platforms, all of the altcoins, all of this crap in the cryptocurrency industry, it's all the very, very top of Exter's Pyramid. It is the riskiest asset you can own. And the risky assets fail first. Just like during the GFC, it was the mortgage bonds and the CDOs that failed first. Just like in the dot-com bubble, it was all those companies with no earnings and heavy debt loads and really high valuations that failed first. The higher up this pyramid you go, the more you're dependent on somebody else for your asset to have value. Think about that over this extended weekend. Look at your assets. What kind of assets do you have? Do you have a pension? Do you have an IRA? A 401k? When is the last time you opened up your assets and actually looked? When's the last time you opened up the prospectus for that mutual fund that your 401k was in and actually looked what was in there? Right now, there's a lot of teachers in Ontario, Canada, who probably thought they had no exposure to cryptocurrency, only to wake up and find out that their pension fund just lost $95 million in Sam Bankman-Fried's scam. That's a lot of teachers who have seen the value of their retirement go down one way or another, whether they have to pay more into their pension or take a cut in benefits to offset it, or maybe the taxpayers in Ontario have to pick up the slack. Either way, those teachers in Canada were exposed to the risk of Sam Bankman-Fried. I'm willing to bet most people out there have never actually opened up the prospectus in their fund and looked at what they're actually holding and think, who has to pay? Whose responsibility is that? Whose liability is my asset? The upper levels are failing in Exter's pyramid. Cryptocurrency is the riskiest asset. But remember, it was only a couple of weeks ago that the pension system in the UK almost failed. There is tightening liquidity in US Treasury markets. Stocks are still in a bear market. History has shown that when the upper levels start to fail, it causes a stampede down the pyramid as everybody runs for safety to try to preserve what's left of their wealth. So use this time you have off this weekend to actually take a hard look at what you're holding. Forget the sales pitch, forget the reassurances from the customer service reps. Open up that prospectus and actually look at what's in there and see what you're actually holding. Most people have no idea what they're actually holding in their retirements right now. Something I say in my live streams quite often is hard times are coming, but they are not quite here yet. So enjoy this holiday with friends and family, folks. I want you to have a great Thanksgiving. And until next time, live small and dream big.